One word: tariffs. Under Donald Trump, it's shaking the world economy again. Trump already imposed a 245% tariff on Chinese goods. Trump is back in the White House, doubling down on his America First agenda with a new wave of tariffs and tougher trade policies. This time, it's not just China in the crosshairs. It's Europe, Mexico, Canada, even uninhabited islands full of penguins. Prices are rising, allies are reeling, and the global economy hanging by a thread. But what does this mean for you, me, and billions of people worldwide? From bizarre tariff blunders to high-stakes battles with China, this is the story of how tariffs became a ticking time bomb for the global economy. This story is more complex and interesting than you're thinking. Let's start with the basics. What is a tariff? How does it actually work? A tariff is a tax slapped on imported goods. The U.S. imposes a 25% tariff on Chinese smartphones. Suddenly, those phones cost 25% more for American buyers. The goal? Make U.S.-made products cheaper by comparison, protect local industries, and save jobs. Sounds like a win, right? Well, sometimes. South Korea, for instance, used targeted tariffs in the 1960s to shield its budding industries, gradually opening its markets to build a powerhouse economy. But tariffs can backfire if they're too broad or poorly planned. And Trump's 2025 tariffs are anything but surgical. Trump has unleashed a trade war on steroids. His 2025 playbook builds on his 2018-2020 strategy, but with bigger targets and higher stakes. China faces tariffs as high as 60% on electronics, batteries, solar panels, and rare earth minerals, critical for everything from iPhones to electric vehicles, EVs. But recently, Trump spares smartphones, computers, and other electronics. Mexico and Canada are hit with 20% tariffs on agricultural goods and auto parts, with Trump accusing them of stealing American jobs. Europe is reeling from a 25% tariff on cars and machinery, hammering Germany's BMW and Italy's Stellantis. Trump's rationale? America's been a global piggy bank for too long. We're taking our jobs back. But the ripple effects are chaotic, and not every move adds up. China was ready from 2018's tariffs battle. They know if Trump got elected again, he'll impose tariffs on China. So China isn't sitting idly by. They've retaliated with precision, targeting U.S. exports like soybeans and corn, devastating Midwest farmers, pork and dairy, hitting rural communities hard, tech components, squeezing U.S. firms reliant on Chinese markets. In Iowa, soybean prices crashed 18% in March 2025 after China's tariffs kicked in, per Bloomberg reports. Companies like John Deere and Cargill reported multi-million-dollar losses due to restricted market access. American firms operating in China, like Apple, Tesla, and Intel, face skyrocketing costs and bureaucratic hurdles. Apple's stock dipped 4% in a single week after China targeted import rules on iPhone components. China's message is clear. If you hit us, we hit back, hard. China makes this war more interesting when Chinese manufacturers started showing real prices of lavish lifestyle brands like LV and Prada. They started making videos on TikTok and show the world how cheap they can make their product in China. And just give a tag, made in Italy, and sell it like crazy prices. All of these lavish lifestyle brands' share prices drop down. But China's fighting tariffs with another weapon, its currency, the yuan, or renminbi. By keeping the yuan's value low, China makes its exports cheaper, undercutting competitors. The People's Bank of China, PBOC, manages the yuan's value by buying or selling U.S. dollars. To keep the yuan low, it sells yuan and buys dollars, increasing dollar demand and suppressing yuan appreciation. China limits foreign currency purchases, curbing yuan demand. A weaker yuan offsets tariffs, but risks inflation and capital flight. One of the main reasons people think it's all about lower United States trade deficits with China. Trump's tariffs aim to shrink the U.S.-China trade deficit, which hit $390 billion in 2024, according to the U.S. Census Bureau. He frames it as America losing money but economists argue deficits aren't inherently bad. They reflect consumer demand and global investment flows. Still, Trump's pushing hard to boost U.S. manufacturing and cut imports. The question is whether higher prices and disrupted supply chains are worth the trade-off. In one of the strangest moments of this tariffs war, Trump's trade team accidentally targeted Heard Island and McDonald Islands, remote Australian territories in Southern Ocean. Population? 0. Exports? None. Residents? Just penguins and seals. How did this happen? A glitch in an outdated trade database flagged these islands as trading partners. The tariffs were quickly rescinded, but not before the internet erupted with memes, and critics dubbed it Penguin Tariffgate. It's a comical blunder, but it exposes a bigger issue: sloppy, shoot-first trade policies. Jokes aside, one of the scariest battles is over rare earth minerals, the backbone of modern tech and defense. These elements power everything from Tesla batteries to F-35 fighter jets. China controls 65% of global rare earth production and 85% of refining capacity, according to the U.S. Geological Survey. Chinese rare earth minerals are critical for U.S. fighter jets, and Trump's tariffs have made this a flashpoint. These 17 elements, like neodymium, samarium, and yttrium, are used in magnets, avionics, and coatings. Each F-35 Lightning II, built by Lockheed Martin, requires 920 pounds of rare earths for radar, motors, and stealth systems, per a 2013 Congressional Research Service report. The F-22 Raptor and F-A-18 Hornet, also from Lockheed Martin and Boeing, rely on similar materials for propulsion and targeting. The next-gen NGAD fighter, under development by Boeing and Northrop Grumman, needs even more advanced sensors and engines. Does the U.S. sell fighter jets to China? No. Federal laws ban military exports to China due to security concerns. Instead, China develops its own jets, like the Chengdu J-20 Mighty Dragon, a stealth fighter rivaling the F-35, and the Shenyang J-31 Gerfalcon, a smaller stealth platform. Both, built by Chengdu Aircraft Corporation and Shenyang Aircraft Corporation, use rare earths, giving China leverage in its own production. When Trump's tariffs targeted Chinese rare earths, Beijing hinted at export restrictions. Panic swept U.S. manufacturers. A single month of reduced supply could halt production lines for EVs, smartphones, and military hardware. Trump's response? Fast-track domestic mining in states like Nevada and secure deals with allies like Australia and Canada. But building a U.S. rare earth supply chain could take a decade, leaving America vulnerable in the meantime. Now here comes Greenland and the Arctic Gambit. Remember when Trump wanted to buy Greenland in 2019? It sounded like a joke, but in 2025, it's a serious strategy. Greenland holds vast rare earth deposits and a prime Arctic location, critical for new shipping routes opened by melting ice. China's growing Arctic presence via partnerships with Russia has the U.S. on edge. Greenland's minerals and strategic ports are now a geopolitical chess piece. In February 2025, the U.S. signed a $2 billion investment deal with Greenland for mining and infrastructure, per Reuters. It's not ownership, but it's a foothold in a region heating up, literally and figuratively. When Trump suddenly paused tariffs for 90 days, then the stock market manipulation claims started against Trump. In March 2025, Trump's tariff announcements triggered a 7% drop in the S&P 500 over 2 weeks, per CNBC. Then a curveball. Trump paused select tariffs for 90 days, urging investors to buy the dip. Stocks rebounded, but critics cried foul. Former Treasury official Sarah Bianchi told Bloomberg, "This looks like policy-driven market manipulation." No hard evidence has surfaced, but the optics, announcing tariffs, crashing markets, then pausing for profit, have raised red flags. But in the tariff scenario, Elon Musk, the richest person on Earth, usually vocal on X, has been oddly quiet about tariffs. Why? 30% of Tesla's revenue comes from China, per its 2024 earnings. Criticizing China risks retaliation, especially as Chinese EV giants like BYD gain ground. Musk's silence speaks volumes about the tightrope global CEOs walk in this trade war. Now comes the main point. Are tariffs creating jobs? Trump claims tariffs are bringing jobs back, and there's some truth to it. Apple opened a new assembly plant in Arizona. Samsung expanded its Texas chip factory. Ford announced 2,000 new jobs for EV battery production. But it's not a fairy tale. Factories take years to scale. The U.S. faces a shortage of skilled workers, with 1.2 million manufacturing jobs unfilled in 2024, per the National Association of Manufacturers. And consumers are paying higher prices, 10% more for electronics and 8% more for cars, per the Consumer Price Index. Job gains in manufacturing are also offset by losses elsewhere. Farmers, retailers, and logistics workers are hurting as exports tank and costs rise. The consumer costs are going to high. Here's the harsh truth. Tariffs are taxes and you're paying them. Smartphone prices are up 12%. Groceries cost 6% more due to agricultural disruptions. Low-income households are hit hardest, spending a larger share of income on tariff-inflated goods. Inflation climbed to 4.1% in Q1 2025, per the Bureau of Labor Statistics, fueled partly by tariff costs. Trump's vision of self-reliance comes with a steep price tag. Trump's first trade war taught us tariffs are a double-edged sword. His 2018 steel tariff saved some jobs, but raised costs for manufacturers, leading to layoffs in industries like auto parts. Farmers needed $28 billion in bailouts to survive China's retaliation. History is repeating itself, only this time, the scale's bigger. But are tariffs uniquely American? Nope, everyone plays the game. The EU slaps tariffs on U.S. whiskey to protect its farmers. India shields its tech sector with import duties. China subsidizes industries to dominate markets. The difference? Most countries negotiate within World Trade Organization rules. Trump's approach, unilateral and unpredictable, breaks the mold, for better or worse. Trump's 2025 tariff war is a high-stakes gamble. It could rebuild American industry or fracture global trade. It's creating jobs but crushing others. It's protecting some industries while hiking costs for everyone. From penguin-filled islands to Arctic power plays, this is more than a U.S. story, it's a global one. Drop your thoughts in the comments. Are tariffs saving America or sinking the world? This is our channel's first video. We're going to make more informative economics and complex topic videos. Till then, be curious and continue learning.